Morning, Market Chameleons. Thanks for joining us for another episode of the Pre-Market Show. How are you doing this morning, Dima?
Good morning, Will. Good morning, everyone. Thanks for joining us.
Another rainy day in paradise here in Pennsylvania. How is it down there in Philly? Good?
Yep, drizzling, a little bit dark, gloomy.
Yeah.
It's okay.
All right, let's get right into it. Let's put up that disclaimer first. Why don't we do that?
Okay. Yep. So before we start, everyone keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your registered investment advisor or call your broker. They should be able to help answer your questions and provide you with guidance. There's the disclaimer, everyone. And
awesome.
With that, let's get started.
When you're going over the pre-market screen, let me tell all that I see we have new chameleons on. Make sure if you have questions, ask them in the chat. Already we're getting some questions. I haven't seen JC before, but he's asking about Amazon and Uber. Just a heads up, D. Okay. Make sure you give us a thumbs up and subscribe to the channel if you're not yet subscribed. There's some big bonuses. The biggest one is you get alerted right when we go live or a new video is released. So with that, let's get started, Dima. What are you seeing out there?
Okay, so we'll start out. I think today for the agenda, we'll start out with the what's going on in the pre-market hours. We're going to take a look at what's coming up in the earnings, see how the options are lined up compared to historical levels, and might take a look at another stock report we haven't looked at before. It's stocks that are outperforming the market. See if we could find some bullish ideas. So let's see if we could cover those three things today. With the pre-market report, these are stocks moving in a pre-market hours. These are stocks actively trading in the pre-market hours before the market opens. We have stocks that are most active, biggest percentage gainers and biggest percentage decliners. Let's take a look first at a filtered list and see what's going on with stocks that are higher market cap stocks. I'm going to use this market cap filter and filter out stocks that have a market cap of $20 billion or higher and see what pops out. So on the percentage gainers list, I see there's 32 stocks made that list, 4 stocks on the percentage decliners list. So at least from that perspective, market breadth more positive than negative in the morning. Some of the stocks up top here, CHWY. That one, what is that stock? Do you know? Are you familiar with that stock?
I think it's Chewy.
Okay.
Mike Moreau may know. I think it's Chewy, which is an online pet supply company. It was, I think, spun off by a venture capital entity, but I'm pretty sure what it is.
Okay. Well, that's up 6% in the pre-market hours. Boeing up 5.6%. NIO, we've been seeing that one popping up already, a couple times this week.
Yeah, there was we've been talking about it every morning in the moves, but I think our friends the Nigerians were talking about some large option activity in it yesterday. Okay. So I don't know if you see anything, but
yeah, we could take a look at really quickly at the unusual option volume report. So you could see here couple high cap stocks getting some decent percentage gains in the morning. Let me take a look at the unfiltered list really quickly. HTC, what's that? Hertz Global. So that's up 121% in the pre-market hours. Looks like what they've been able to secure some debt, issue some debt. So that's 121% on 46 million shares trading hands. And that market cap, small market cap, 160 million. I don't even know, are they operating now? They're allowed to operate, right? Most of it is though from.
I think they are, yes.
SBGX, let me just see what that stock does. Metal fabrication up 88% in the pre-market hours. Let's just take a look at this one up top, Hertz, see what's going on in this stock in the pre-market hours. So we see stock closed at $1.03 yesterday, 52-week range, 40 cents to $20.85. It's trading in the pre-market hours, $2.29. That's up 122% from yesterday's close. There is some news here. I'll let you guys read that news, see if that move is justified. But here's the pre-market VWAP, $1.83. Range in the pre-market, it traded as $1.02 to $2.35. 48.2 million shares trading hands in a pre-market hour compared to a float of 100 million. So on a relative basis, very, very active in the pre-market hours. Let's take a look at its gap history, see what the stock tended to do after a large gap to the upside. So this is looking in the last 3 years, 12 largest gap moves. And here are the dates of those moves. Here, over here, we see what the gap was in the morning. And we see that the average of the 12 largest gaps is 36.1%. The largest is 132% on June 5th. And so we see here up 122% now, way above the average, but near that high of those observations of 132%. So this is what the stock tended to do after the opening. So gapped up, this is what it tended to do after the opening bell. So from the open to the high of the day, the average move was 22%. See here, this one as high as 83%. On this day, we're moved up 132%. You know, it looks like that it made it as much as 6% higher that day before backing off. But that's the average move, 22% from the open to the high. From the open to the low, average move of 14.7%. It looks like from the open to the close of the day, it was 50-50. Half the time it was higher, half the time it was lower, for an average gain of 4.5%. We could see here from a volatility perspective, the average move from the open to the close, 15.8%. So very volatile after the open, you know, up or down as much as 15% on average, with a high move of 62%, which is right here, where it opened on June 8th, opened up 32%, gained another 62% on top of that from the open to the close. So that's really quickly HTZ, a real quick price return distribution analysis after the stock had a big open gap move to the upside. Were there any questions on the pre-market report, Will?
I think you're good. Just a heads up with that Chewy. Both Paul said, who's on just about every day, and he has a really good question about the screeners and getting emails. But Paul, you may want to put that in the forum. I'll put a link to the forum. Any questions we don't get to, please go to the forum and answer them. But they were just saying Chewy was upgraded, I guess, by Jefferies.
Is that the news right here? Right, Chewy after Jefferies points to strong adaptation. So up there we go. So you could see here, kind of in the pre-market hours, a little bit choppy with trades coming in here and there. Traded 71,000 shares in a pre-market hours. This is the range 67.06 to 69 with the VWAP price 68.37. You see here currently trading 68.98, up 6% in the pre-market hours. I mean, we could take a look at this gap history. So seeing the last
as you're going to that, Jen Welsh, our favorite realtor from Boise, I guess there's an article in Market Watch today. Maybe Jen, if you can, actually try to post that in the forum as well. The Market Watch article says young and dumb traders create nightmare in the market, and it states that $50 billion of bullish call options have been bought by small retail traders in the past 4 weeks, compared to $1 billion in 2007 at the same period. So
compared to 2007,
they're going back to 2007, I guess. You know, trying to make a comparison between 07 and 08 and today, maybe. I have no idea.
Yeah, but in general, all the volumes have been steadily increasing every year. So
yeah,
I don't think it's like, but yeah, for sure, a lot more people trading options than before. And I think part of that is just that, you know, you got the low cost brokers right now. It's much cheaper. Commission wise, it's much easier to trade than in 2000s. Like in 2007, I don't even know if you could trade online.
No, I remember when it was $15,
Was it
$20 a trade.
Yeah, it was like
It's
15,
almost
$20
free
a
now.
trade. Yeah, you couldn't trade off your mobile device and stuff. So it's not so yeah, we've come a long way. Just technology has improved. The commission fees have been way down. I think just more people are more, you find a lot more education on options, right? Like it was harder to even figure out what these are 2007, 2008. Now you got a lot of just, you could go onto YouTube or Google and figure out what, how to trade these things. But anyway, let's take a look at Chewy here, up 6.3% in the pre-market hours. We got opening gap in the last 3 years on the 12 largest gap moves on average up 5%. This is what it tended to do after the opening. From the open to the high, the average move was 4.5%. From the open to the low, excuse me, from the open to the low, average move negative 3.8%. Looks like it tended to close lower a little bit more often than higher, 58% versus 42%, but on average, it gained 0.3% from the open to the low. So we see that in those days, the moves to the upside were skewed a little bit higher towards the upside than the downside, right? So moves to the upside had larger stretch than moves to the downside. That's on Chewy. Do we have another one for pre-market hours?
Nope,
or
that seems about it.
All right, so let's take a look at the earning. You know what? Before we go to the earnings, while we're on stocks, let's take a look at the outperformers. I don't know if I ever went over this list. So what this list is just taking a look for stocks that are performing well relative to the rest of the market, right? So like if you're trading and you're picking stocks, the whole idea is, well, if I'm taking a risk in a stock, then then I should be able to get more reward for the risk I'm taking. Otherwise, I'm better off just buying like SPY, right? So why would I go into a stock and take more risk if I could just have less risk and better reward just sticking into SPY?
So D, can you just show where you clicked on again to get to that?
Yeah, so I'm on the stocks, outperforming stocks over here.
So it's under the market action list. All right, great.
Yeah, market action list, outperforming stocks. And this is continuously scanning stocks and measuring their performance relative to SPY, which is this, we use that as the benchmark for the S&P 500. And this is what this list is doing. First, it's taking a look at the 2-week performance, 3 months performance, and 6 months performance, and comparing that to the SPY 2 week, 3 months, and 6 months. If it's outperforming percentage wise, that's one of the conditions to make this list. I think we also just include the 7-day as a visual, but we do 2 weeks, 3 months, 6 months because you want, any one given day could be off, but you want to smooth it out with averages or longer periods. So that's one of the conditions. The other condition it looks at as it compares in the last 15 days, which is 15 trading days, which is about 3 weeks. It compares how many days was this stock up relative to the market, right? So, for example, here TMO, we see 67% of the time the stock in the last 15 days was higher, right? So that's also comparing it to the rest of the market to see if it's doing better, right? Now it's looking at daily returns. The other thing,
D, I'm wondering, actually it's coming through the chat, but I'm wondering, are you holding out on us? I see like McDonald's, Qualcomm, Caterpillar, and Target all in like a special Dimitri watch list. Are those just stocks you have in your personal account, or
well, this isn't my watch list. This is just a report.
No, right? I'm just seeing, just so everyone knows. They were asking why some next to the fact sheet. some have
Yeah.
pluses and some have check boxes. You can let them know what those
Okay, yeah,
are.
yeah. So yeah, well, with these check boxes, that does mean that some of these stocks are in one of my watch lists. So
Yeah,
that's
I
what
got it.
this is. That's
Yeah.
one of them in my watch list. And keep in mind, I have, you know, I have multiple accounts too. Some I use for testing, some I use for personal.
Yeah.
So I have
No,
different.
I didn't want to expose you or something, but they were asking. So everyone who's asking, if you hit that plus, that actually you can take this stocks and build a watch list off this, right? For anything that interests you in there, you could
Yeah,
add it to a
exactly.
watch list, start building a new watch list, whatever. But
Yeah, I forget what McDonald's is like one of my watch lists, like the
well, who doesn't love
like
a
a
Big Mac,
recession.
buddy?
Yeah, it's kind of like a recession proof, right? Like what a McDonald's, because it's a lower cost, and also McDonald's, McDonald's is kind of like a real estate play, right? Like how does the McDonald's
Well,
work? Like
it's a franchisee play, it's real estate,
franchisee real estate,
but
right?
during this whole coronavirus, I mean, they created the drive-through model, right? So they probably were able to still drive a lot of business this whole past 6 months through the
Yeah,
drive-through.
even though like in Philadelphia, I've seen them. A lot of them were closed, for a while. I don't think they don't do delivery, do they?
I would think
McDonald's
they do. I would think yes. I would think Uber Eats probably delivers them in the city.
Really? Okay.
Those cities, the whole dynamic of cities have changed, right? People
Yeah.
probably weren't even leaving their apartments or anything. I don't know if delivery companies are even allowed to deliver in New York to apartments. I have no idea what the
Yeah,
rules are.
I don't know. I just know that McDonald's for me it's dangerous because like their French fries are addictive. Once I get it for my kids. I try French fry. I'm like, ooh, I
Yeah,
got to go back and get some more.
it's easy to put on 50 pounds that you don't want if you're
Yeah,
eating at
yeah.
McDonald's quite a bit.
So, but yeah, these check marks mean that I already have them in my watch list. That's what this was. Just
Cool.
like if you create a watch list, and you could, by the way, just create the watch list right from here. You click on this. You could add it to one of your watch lists, or just add a new watch list. Like over here, just click on this. Create a new watch list, like my outperformers, and do it that way. But coming back to this report here. So the first thing it compares the stock's performance relative to the market based on certain periods. So here we've got 2 weeks, 3 months, 6 months. We also then dive deeper in there and look at average daily performance. So what it will do is compare, well, in the last 15 days in the most recent history, how many days was the stock up relative to the market, right? So just counting up number of days. So to make this list, it has to be up more than the market. It also compares, well, what's the daily average return? So smooth out the returns, basically taking the average of the daily returns. So that's what we have here in TMO. 67% of the days in the last 15 days, it was higher. The average return of those 15 days was 1%. Then we want to compare it to, well, what is the daily risk, the volatility, right? So that's what we do, is take the standard deviation of the returns. So that's the standard deviation returns. And then we take the average daily return divided by the standard deviation return to get this return divided by the risk ratio. Does that make sense? So that's what we call the Sharpe. The return divided by the standard deviation of the returns. So, what we want to see is this number higher. We want to see greater returns with less standard deviation. So assuming like if every day for 15 days that the return was 1%, 1%, 1%, 1%, basically there's no standard deviation, right? This would be very low. So that's what it's doing, looking at the standard deviation of the returns. So having said that, and then comparing that to the rest of the market. So this has to be better than the SPY. So let's just take a look what's going on here. So TMO, Thermo Fisher Scientific, so this is in the healthcare. Let's just make sure diagnostics and research, Thermo Fisher Scientific, that made the list, and I have them sorted right now by market cap, highest market cap. McDonald's, that's on the list. So we see here, last 15 days, it was up 73% of the time. On average, it did beat the S&P 500 with a Sharpe ratio of 52%. NextEra Energy, I think that's a utility company, right? And we're talking about utilities. They've been doing pretty well, NextEra Energy. So we see here, these are the 2-week, 3 months, 6 months performance. 67% of the days in the last 15 days, it was up for an average daily return of 1%. Qualcomm made the list. 73% of the days in the last 15 days, it was up for an average return of 1%. This Sharpe ratio a little bit higher, 56%. Texas Instruments, average return 1%. HDFC Bank, don't know that one. Now we've been talking about, right? Is this a relatively new stock? Well, now software
Yes.
application.
Yep.
Right, so that's been making, like, even our pre-market list. That's been outperforming the market. Caterpillar, that's been so actually I was looking at it. I think Caterpillar, Deere, they've been doing well. I don't know, like, in the construction. So I think, like, maybe if we start recovering, getting maybe stimulus infrastructure, those might stand to benefit, right? So that's Caterpillar. That's up 73% of the days in the last 15 days, average return 1%. You can see here, with lower volatility in there. SQ, Target, that made the list. That was up 87% of the days in the last 15 days. Canadian National Railway, is this one that Buffett owns or invested in?
If he doesn't own it, he's looked at it. That's for sure.
Right. Deere, that's up, again, 80% of the days in the last 15 days, average return 1%, standard deviation 76. Sharpe 76. FedEx, remember we were talking about them. They're kind of benefiting also from people staying at home, mailing stuff around. That was up 80% of the days in the last 15 days, average return 1%. There's your Sharpe 81%. So Twilio, I think we've been talking about that one. Been making the pre-market list. That's been on there for Peloton. That's been making the pre-market list, large gains. So we see here 73% of the days. Peloton was up in the last 15. Twilio, 73% of the days. You can see here that average return 2%. Let's sort by lowest market. So I think we have it as at least $1 billion market cap or higher. So we see here GoPro, that made the list. 73% of the days it was higher. Average daily returns 4%. Again, this is a lower market cap stock. Here's an ETF, Cloud Computing, CLDOU. That was up 73% of the last 15 days, up with an average return of 1%. Home Builders, that made it up 73%. The Home Builders ETF, that was up 73% of the last 15 days, average return 1%. So again, just kind of giving an overall here, clean energy, two of them, solar and ICLN. That's been making the list. So you can see here, outperforming the market. Again, kind of a way to see where money is kind of flowing with strength, right? So it's kind of holding, and we're looking at it from a couple different perspectives, different date ranges, and on average daily returns to see relative to the market where there's strength and where money could be flowing into right now. So that's what this report is trying to filter out.
That's a great report, D. Thanks. Listen, we only got about 6-7 minutes left. Okay. We did have a question. Someone wanted Amazon, see if there were any trade ideas in it, some trade cards. Okay. And I know you wanted to maybe hit earnings, but all
right, let's take a look at Amazon. So from Amazon, let's take a look at trade ideas here. So let's take a look at, these are three highs by edge. Let's take a look at if there's anything in bull call spreads. So bull put spreads, it filtered out one. So here it's taking a look at, this is a vertical spread. It's looking at October 23rd, selling the 3,305 put, buying the 3,300 put. So $5 put spread, stocks 330, that's where it closed. So that market price on that spread $1.50. We think it's worth $1.44, giving you slight edge 1.7% with a theoretical historical win rate 71%. If you're looking at it from, let's see, if debit iron condor, credit iron condor. So these are selling out of the money puts and selling out of the money calls. So the idea is that the stock kind of sits in between those short strikes. So we see here it's selling the put spread in October 30th, the 3,210 put, buying the 2,960 put. So that's a 50. Hold on a second. Am I doing this? No, I'm sorry. That's like a $250 put spread. Then that's selling the out of the money put spread here, then selling the out of the money call spread in the same expiration. Selling the 3,600 call, buying the 3,850 call for $103.50.
Jesus, that sounds like a lot. Are we talking?
Yeah, you guys are thinking. Well, you gave me a really high price.
Yeah, no, it's interesting.
$3,000. Yeah, $3,000.
When are they going to split this stock so it comes down to some manageable, numbers?
Well, we've seen what happens when they announce splits, right? And we've seen what happened to Apple and Tesla on those announcements.
It's been showing up like a 20 to 100% move to the upside, but being said, the next one maybe in the middle of a market sell-off, who knows? So are there any earnings going into this weekend that we should be aware of real quick?
Yep. So let's do really quickly. That's 22% theoretical edge, historical win rate 71%. If you wanted to see, I'm going to just show you on the report. If you bring it, if you bring it up, the payout diagram, just so you guys know, what the payout diagram looks like for a condor like this. So you're, this got cut off, but you're maxed out on your losses on the wings, and you want the stock to stay in between those strikes. Let's take a look what's going on, what's coming up on the earnings. So these are stocks that are expected to report earnings the next 2 weeks. I'm going to filter out here for stocks that on average trade 5,000 contracts or more per day. So we have here October 19th, that's coming up next week. Halliburton, expecting October 19th before the market opens. Yesterday, the straddle closed where the implied volatility is implying a move of 8.8% in either direction, right? So this is the straddle, buying call, buying put at the money. That compares to, in the last 4 quarters, the moves average 2.6% in either direction. So we're looking at absolute terms. And in the last 12 quarters, the moves average 3.6% in absolute terms, with a high move of 9.1% in the last 12 quarters. And I know that this industry has actually been kind of hurting, right, with the Halliburton, Schlumberger, that energy sector. IBM, October 19th, is expecting right now, straddle's pricing a 5.1% move. That compares to a 4-quarter average move of 3%, in the last 4 quarters, and a 12-quarter average move of 5.1% in either direction. So that's, here we see 2.1% above the 4-quarter average, kind of in line with the 12-quarter average, with a high move of 8.9% in the last 12 quarters. So I know we're running up against the bell. Well, do you have any questions?
Well, truth be told, I am a person who's watched Snap a lot. I'm wondering if there are any option strategies detected in Snap going into earnings.
So let's just take a look. So here it's still kind of far away, but I could just take a look really quickly into the history if I press on that snap view. And this is just taking a look at what different option strategies in the past, right? So it's not taking into account today's markets. It's just looking at in the past what option strategies tended to work. So over here we see we're looking at 1,320 different variations of option strategies and different time frames around it. So we see here a calendar spread, putting on 1 week before, taking it off 1 day after. If you're selling the near term out of the money call, buying a further out of the money call, right? So this is not at the money, out of the money. That was a winner 67% of the time with an average return of 97%. Same for the put, calendar spread, also the day before to 1 week after holding it. That was a winner 73% of the time for an average return of 66%. And debit put spread. So this is an out of the money, long 25 delta, short 15 delta out of the money put spread. Day of earnings to the day after was a winner. That's only looking at the last three. That was a winner 67% of the time for an average return of 64%. So that's really quickly. And let's just take a look at strategy. Let's pick a straddle, all right? Let's just take a look at a straddle from the buy side. So from the buy side, 3 days before earnings, day after was a winner 75% of the time for an 8.4% average return. Again, this is only looking at historical performance. So then you have to compare today's markets and what, if anything else is different about it. It's just guidance of what tended to work historically.
Awesome job, Dima. 9:30, bell just went off. We got to get in front of our monitors. Thanks for joining us, everyone. To all those new chameleons, we're on every morning, Monday through Friday, as long as the market's open. Is that correct, D?
Yeah. So hopefully we'll see you guys next Monday. Have a great weekend, everybody. Have a great trading day. Thank you for joining us.
Awesome job. Stay safe, everyone. Great job, Dima. Thanks, chameleons. Have a great